Coming up in this show, I'm going to bring you my opening comments on the markets. Arvi has a sample for you of Future Speak, who's going to give you a great cycle analysis lesson looking at the USD CAD. I'm going to show you a short-term view of a comparison of the correlations in bonds, dollar, and gold. And the reason for that is because I think that a setup is coming on the long side in the gold market. We'll show you our cycle analysis workshop special. This is the final weekend, so you can invest in a great deal and get free memberships while you learn our analytical method. And then I'm going to bring you analysis of the S&P 500. We'll look at 1 to 5 month view, looking out to what is probably a pretty favorable period. You'll be interested in seeing this.
Well, I'm going to the city and I'm gonna do a city show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone reclining, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go askSlim.
Hi, I'm Steve Miller. Call me Slim. And this is the askSlim Market Week. It's a look back at what happened in the financial markets in the past week, and a look forward at what might happen in coming weeks, and hopefully lots of great ideas and opportunities for you throughout the show. Well, the stock market chopped a bit lower last week as investors focused on earnings and the prospects of deteriorating economic conditions. Good gains came early in the week as China reported better growth than what was expected. But poor results from Netflix and Tesla, and continued extremely high inflation in the UK, which came out at 10.1% annualized, that sent the indexes lower midweek. Tesla came out with poor subgrowth, and that was Netflix. And Tesla, they had cut their prices 6 times. And then Musk, really feeling the competition breathing down his neck. There are so many EVs out there and more coming. He really implied he's willing to sacrifice margins to hold on to market share. So this was just really the beginning of earnings reports, with only about 10% reported so far. So the real deluge is coming just in the next couple of weeks, and we can expect some pretty good moves. Also, coming back into investors' focus is the looming crisis on the debt ceiling. Republicans made an offer Democrats can do nothing but refuse, and it was loaded with spending cuts. And everyone really expects some can kicking again, and that may happen, but this does feel different this time, and it could shake things up before they make another bad compromise. Remember, spending cuts have to happen because this debt is moving up geometrically, and you can only kick this can so far before they're overwhelmed by this massive debt that is just absolutely set up to cause huge problems down the road. For the stock market, it's now extremely resistant to downside corrections. And while our intermediate analysis has been great, short term, we've expected some dips that should have been deeper and offer better buying opportunities than we've seen so far, and that has not happened. And that is the nature of a bull market with very strong upside momentum. I'll show you our momentum indicators just in a little bit. That's not likely to change much, as our analysis still points higher into the summer, with a little period for a dip coming into May. And I'll show you that in a few minutes. But other than these brief downside dips, the short side is clearly the wrong side. This is earlier on Friday than I normally record, and I've got the report to give you anyway. At this point in the morning on Friday, we see markets that are very narrowly mixed, really small changes on the week, with the downside maybe getting a small edge. Bond market also very small changes, barely and really imperceptible. Gold market falls about $17. It's still hovering around $2,000. And I'll show you in just a few minutes what I think is a very nice buying opportunity coming up. The dollar, a tiny uptick on the week, but it's in big trouble. Maybe not yet. I mean, just there could be a couple of weeks, and I'll show you that too, where the dollar could move to the upside and set up that buy in the gold market. Oil moves down pretty sharply, $4.70 on the week so far, as it moved up into a resistance area. And we think that that oil market is going to chop down into May. Now, for those of you that are brand new, we offer analysis on 24 different futures contracts, and that is in the Future Speak show. And Ivy is going to give you a example of that as he shows you the US dollar CAD in just a couple of moments. 24 different futures contracts in that amazing 1-hour video that comes out every single Wednesday. So make sure you become a level 2, 3, or 4 member. If you're new to askSlim, please go to the website and explore. Get acquainted by becoming a level 1 member. This is huge information that you get every single day for just $45 for 3 months. Go take a look at that level 1 special. You'll just love it. On YouTube, please do subscribe to our channel, click the notification bell, like the video, give it a thumbs up, and on Twitter, follow us at askSlim. Any questions that you may have about everything you're going to see now, our memberships, our huge offerings of education and analysis for traders and investors, please do write to Matt at askSlim.com. All right, this is a sample of Future Speak. Ivory's going to teach you some things about cycle analysis, great analysis on the US dollar CAD. And this is a sample from Wednesday's show, and this is level 2 through 4 content. Show it to him, Ivy.
If we go ahead and shift over to the USD CAD, we have been watching this one closely because it did look like it was trying to form a short-term low and also a minor low here on the weekly and get into this rising phase. But keep in mind that this longer cycle has likely formed its high right there, and we are in an intermediate term corrective period. So the highest odds would be that this would only form a bear flag, and then we will be watching for it to turn down. On the upside, we have a zone from 135.14 to 136.56. We'll be watching for it to rally up into that zone and then see a consequent failure. There is a low here that is due 612 to 724. If we shift over to the daily, now this rally here and then this really sharp sell very quickly was what had this on my radar for a short-term bottom. For those who are members of our Discord server, you will note that we have been mentioning this price action here. Anytime you see this kind of action late and then one sharp sell, you should really be watching for a low to form and then for this to act the way it is acting now and actually moving up through this bearish bar. That is really a good indication that we are forming a short-term bottom here in the USD CAD, and there are good odds that we would rally back into the zone from, as I said, 130 from 135.14 to 136.40 or so. Okay, we'll be watching for a rally up into that zone, and then we'll see how it acts as it gets up to that zone.
Really important analysis, and I'm going to show you in just a moment also more information on the dollar and how that is all in alignment with correlations with bond market and the gold market. So that's coming up very shortly. All right, this is a very short-term look at bonds, dollar, and gold. We're going to look at the cycle analysis and correlations, which is so important, and also the momentum conditions. And we think we're setting up a dollar sell and a gold buy, as now gold has pulled back a little bit from the peak that it made. Let's take a look here as we start out looking at the Treasury market. And what's happening now in the Treasury market is really interesting because You can see what we're getting in here is what we call a cyclical breakdown right there. This was the last low of the cycle. So you say, what is a cycle if you're brand new? And that is essentially a rhythm in the market. Cycles are measured from low to low. And you can see in here this beautiful cycle rhythm right in here. And this one that aborted very early and came and broke that level and then fell all the way down in here. And you'll note that the momentum turned negative as per the slim ribbon. And right over here, you see all of this red in the slim ribbon PO, which was telling you the weakness in there. And then it turned positive, as you can see, a positive cycle and another rally where treasuries tested that high. And you can see in here the momentum was positive, the slim ribbon PO giving resumption signals on the upside, and the slim ribbon positive right in there. What you see right over here is now the slim ribbon has neutralized, and this important low at 114.07 in the 10 years was broken. That says that there's a likely further decline coming in the treasuries over the next 5 to 8 days, I would say, is what it really looks like. So in the next 1 to 2 weeks, we'll say there's likely to be a sell-off right in here, and then make some kind of a bottom. This sell-off is important. Why is that the case? Because when interest rates go up, when the treasuries goes down and interest rates go up, that then usually sets up a time frame where the dollar moves higher. Of course, when the dollar moves higher, then we get into a period where the metals tend to move lower. So let's just take a look at the correlations here as we look at the dollar. And the dollar right over here is showing us that it is in a period where it is just now putting in a short-term bottom. Let's just look at these cycles right in here, and you could see this big dominant cycle pattern right there. And there's actually 3 minor cycles. It's 1 and 2 and 3, and bottoming right in this time frame. What that essentially says is that right now the dollar might be able to get a little bit of a lift in here, but it's moving into this resistance period. You could see that area there, resistance, essentially means that it's a sell zone for the dollar, and that's usually when you want to buy euros when it gets up in that area. And that means that the dollar is likely to get a temporary rally in here, and what is a pretty negative condition for the dollar. So this rally right in here that we expect to get for the next, we'll just say 1 to 2 weeks, is likely to be happening and putting pressure on the gold, silver, metals markets. That's just what happens. As the dollar gains in value, the gold market declines in value. Let's look at the short term right now in the gold market. So we look at /GC, and we're going to look at these beautiful cyclical movements in here. And you can see these little yellow zones are where the period are for the end of each of the cycle. As you can see, here's the big dominant cycle, dominant cycle, dominant cycle, and dominant cycle right there. So each of these lows just got set a little early. This is the cycle, and this one right on time. And then there was the little minor cycles that are in there. And what that says to us is that, yes, the next 1 to 2 weeks is likely to see the gold market moving down. And that gets into this buy zone right over here. So what we're really looking at is what is the best opportunity to be buying gold for the short term, because we think gold is going to an all-time high, and that would be in this next couple of weeks. The support zone right over here is about 1974 to about 1945, with an outside down over here at the 1917 level. You see this moving average coming up, the 89-day moving average, also often lends some support, as you see right in here and right in here. So that means that in the next couple of weeks, when it gets down in here, it is likely to set up a buying opportunity. Hence, we have that in there listed as a buy zone right over there. So again, once it gets under that 1974 area is really where we want to start thinking about the next long side opportunity, which is likely to come out over here in this mid-May period through June and maybe even through July, where we think we're going to see prices at all-time highs in the gold market. Summing it up, What we see in here is a period where the bonds have a short-term breakdown. They're likely to be moving down, which means interest rates moving up. When the interest rates move up, the dollar then attracts buyers because people want to be in that currency, which can get them a little greater appreciation. So they move into dollars because the bond yields are moving up. That is not a perfect correlation, but it often happens. And again, when the dollar is moving up, the gold market essentially moves down. And we believe that this next, we'll just call it somewhere in the next 1 to 2 weeks, we're going to see all of this happen. And what does it do? It sets up a period where the dollar is likely to be a sell and the gold market is likely to be a buy. And we think that could be a very good buying opportunity in the gold market, somewhere under the 1974 area, maybe 1945, to make a move up to all-time highs in the gold market. That is really a quick look of a very short-term picture in bonds, dollar, and the gold market. This is our cycle analysis workshop, final weekend. Invest in this invaluable workshop and receive a free month of our level 3 membership and a free month of our new premium market condition monitor. This is a fantastic app that we have, and you're just going to absolutely love it. This is a 38% discount. It's $897. That's a value of $1,450. With it, you get level 3 and the market condition monitor for 1 month, non-recurring, so you don't have to worry about any further charges on that. The cycle analysis workshop, however, is lifetime. You get 24-hour access. You can watch these videos over and over again. I get so many emails from saying that this is just incredible and how it is actually life-changing for them. If you're a present level 3 or 4 member, you can still save 38%. It's $500 off the cycle workshop. Don't miss this opportunity. That's just $797. If you are a level 3 or 4 member, write to Matt at askSlim.com for info and the special link. What's in this workshop that I developed over 48 years. It took 2 years to write and 6 months to produce. There are 23 video modules. Plus, there's links to many other associated learning experiences in the videos for tools for techs. You will just absolutely learn a ton. Like I said, this is lifetime access. You don't need a special platform. You will never look at charts the same as you did before. It improves your directional decisions. You'll project in the market in time and price, which very few analysts are able to do. You will become one of the analysts like you see on our team, having those skills and that understanding of the market. You can get a little more information by writing to Matt for a demo reel, which has clips of most of the videos, little pieces that you can see and get some ideas about what this looks like. Go to askSlim.com workshops. Again, write to Matt at askSlim.com for further information and links to sign up for this great workshop deal. Stock market analysis and projections on the S&P 500. Make sure you take a look at this slide. It gives you all the information about how we present this analysis and things you'll need to know about what we're doing and what it means for you. Stock market analysis, S&P 500, 1 to 5 months. We're going to look at the SPY. So let's take a look here as we look at that. This is the SPY, the spiders, and this is going all the way back into 2020. So we're looking at a weekly chart in here. I'll expand on it a little bit, give you an idea of the things that we're looking at in here. So the first thing I want you to note is that we're going way back here to 2020, and this rally that you see in here is what was the everything bubble. It was the market that was moving up as the government, Federal Reserve, was pouring money into the markets, and it moved up so steadily that even the cyclical actions in here were what we call swamped right-hand translations. This is a cycle right in here. You could see the blue cycles on the bottom. That is the dominant cycle that has been in here, and you can see that these vertical lines show you where those cycles troughed. In other words, where the lows were or the bottoms, and cycles are measured from low to low, to low to low. And you can see the repeating rhythms that are in here. That green bracket on the bottom is a little different as it aligns up with the Russell and the European market, the FEZ, and that is due to have a bottom or a trough out over here into the late May, early June time frame. That's significant in this analysis. What I also want you to notice are these yellow ovals, and what those show you are the times where there are corrective phases in the markets. When the market is very strong, and you could see the slim ribbon the reversal scout right in here, which is gives you the momentum conditions, proprietary indicator, and when it is continuing to rise like that and only leaves a little corrective time, as you see here and here, they are very brief corrections, we'll call them. In this case, it rolled over and then had a more time to fall, and it actually broke the key level right in there, which told us it was very likely a top formed. Cycles also form head and shoulders patterns and all the other patterns, and you could see the minor cycle right in here, just beautifully shaped, and that made a left shoulder, a head right in here, and then the right shoulder as it failed early. And once that failed early and got under this level, it said there was likely going to be a decline through this minor cycle and then both cycles where they both had a synchronized trough right in there. In fact, all three cycles did at that period. I'm going to take a little closer look in here now, and you'll be able to see these last cycles right in here and what we're looking at this present time. Just get even a tighter look right in here. So what we believe is that this rally that has been going on and this low came right on time for us right over here. What we believe is that this is an upside correction and will be followed by phase two. And that means that the Great Reset phase two is somewhere way out over here. But we think that this rising phase, as you could see here and here, will continue to push the market up way out into late in the summer. Our VIX analysis, implied volatility, says that in the big picture, the decline that you see going on now in implied volatilities is likely to continue out until a major low in VIX that's due out in the late summer, early fall. That's the reason why we're projecting so far out over here. There is this cycle right in here, which is the FEZ and the RUT, which is likely to get you a little pull down right in here and also in alignment with this minor cycle. We have talked about in the short-term analysis that there were big resistances up above, and the market was likely to have a tough time getting through those. Let's take a look at that right in here, and you can see that exists right in this area that has other longer-term resistances in it. So here's that last cycle peak resistance, and you can see that coming across right over here. Because of this positive formation right over here, and because the momentum is turning up with the reversal scout and turned up significantly, it says that declines during this period are likely to be shallow. And that even if it does get down to the support levels right over here as shown, it is likely to move up again. The probabilities are very high of getting out over that cycle peak resistance right there, which is around 419 on the SPY. And then between that 419 area and 422 right there are where those short-term resistances are. And then a major 61.8% fib extension right up over here around 424, and this major peak right over here up there around 431. Now, our projection for the stock market this year, when we came into the end of the year, way back over here, was that it makes it all the way up to 430. And you can see that has been great analysis to this point. While we've looked for some deeper declines right in here to give us buying opportunities, well, those have not happened yet because the short-term and intermediate momentum is extremely strong. So that has prevented the market from being able to give much ground. And buyers are coming in all of the time when the market moves to the downside. We would expect there would be some further period out over here where it can give up more ground, and then over here it would turn up again. And you will have this major cycle in Europe and the Russell pushing up right over here. This cycle, the blue one, will still be pushing up out into into this period here, and then this second minor cycle right there will push up out into the late summer also. So this period out in late summer, and that's why I said this is 1 to 5 month analysis, is the period where we expect there to be the top for the year. In the meantime, what I think is going on is really an upward channel that we see in here that, again, is the upward correction from the Great Reset Phase 1. Those people that believe that, well, this is a new bull market that's going to go to all-time highs, I think they're going to be sadly disappointed, because the market made all-time highs in a period of extreme stimulation and got up to levels of 200% of GDP, which is just not likely to happen again and probably will not get close. That's why we were looking for this whole period right in here to contain the upside move in this period of resistance, and then ultimately be able to get through it and potentially get up to that 430 area or 4,300 in the S&P 500. So it's 430 on the SPY, 4,300 on the S&P 500. The very bottom of this area right here is the absolute extreme, which has this big resistance area there coming across, which is 436. I don't think that's going to happen. I think 430 is probably around the best level, and that will take a bit of a buying panic to get up there. Again, what we're looking at is the potential for some dips out into the May timeframe and then moving up again. The likelihood of getting through this short-term resistance area right there is very small, and we expect to see a lot of attempts and rejections in there until ultimately it does give ground. Support right over here is at around 402 down to 398 there, and then the bottom of that, which is short-term support, comes in around 394. So this is 402, 403. This is around 394. That is the area of support. We consider that a buy zone. We're able to get back down there because then these cycles are going to be pushing on the upside. I would not be surprised to see this correction come in here and our reversal scout remain positive, because it does look like this market has the potential to stay quite strong. I want to look at the conditions that we see here in the market condition monitor. This is our market condition monitor in here, and this is an app that you can subscribe to and get, and it's just fantastic. You'll be able to get everything you want to know about conditions. This is now set up on the trader mode. There's also a time frame mode. This is looking at the intermediate, and there's also short term, there's near term, and there is also the looking at this, really a mode for scalpers that you'll really like for intraday. So, but let's just scroll down in here and you can see these conditions that you see, and you get a very good idea looking at the SPY, and you can see that it is in very bullish condition. The QQQ in bullish condition, so that has actually improved. The IWM is only neutral, and that has a reflection of a weaker Russell, and especially a reflection of banking issues, because the small cap banks are in there, and they are the ones that are weighing on that index and will probably continue to do so. And you see the Dow there also is very bullish, and that actually turned very bullish on 418 at 9:30 a.m. You can see in here, this is the change log, and this shows you just tons of things that are in this that you'll be able to see. I'm just only right now showing you, looking at the indexes, so you can get an understanding of these conditions and this app. This is a fantastic app, and remember, this is now included for 1 month for free if you do subscribe to the cycle analysis workshop. So this is showing you very strong market conditions. I wanted to share that with you so that you can see that. Excuse me. And that is why I think that if the market does correct in here, it's going to be quite shallow. And likely, if there is a significant correction in any of the indexes, it's going to be in the IWM, the Russell, because that one still looks unfinished on the downside to me. And again, the Russell does have a period right in here where it can get thrown away. In other words, some good selling in those low cap stocks out here into the late May timeframe. So this 5-month view essentially is a bit of a dip out over here into May, a buying opportunity, and a continued rally out over here into the summertime period, late summer potentially. And again, here is that cycle analysis going way, way back here to that very, very important buying panic, the everything bubble, the great reset phase 1, and the upside correction that we see right now, which is likely to be followed by the great reset phase 2. That comes late in the year and into next year. So that is a look at the 1 to 5 plus time frame there in the stock market. And I hope you found that extremely valuable. Please remember that our cycle analysis workshop only has 3 more days to go. This is the final weekend. So invest in this invaluable workshop and learn the type of analysis that our amazing team does. And you'll get a free level 3 membership and a free 1 month, these are both 1 month memberships of our market condition monitor. Those are non-recurring, so you will not get charged again. You can save 38% whether you're brand new or whether you're a level 3 and 4 member, and you can write to Matt at askSlim.com for those links and any other information you need to know about this workshop. Please go to askSlim.com and look around. Subscribe. If you're new, get acquainted by becoming a level 1 member. $45 for 3 months. You cannot beat that for daily information that you get in the stock index report. On YouTube, subscribe to our channel, click the notification bell, and give this video a thumbs up. And watch member videos in the playlists and past shows. I think you'll get a lot of information. On Twitter, follow us at askSlim. And write to Matt at askSlim.com for any questions you have about what I've presented here today, about our memberships, educational content, and amazing apps. Matt at askSlim.com. I want you to be so careful. It is so crazy out there. And I'm always wishing you great trading.
Well, I'm going to the city and I'm gonna do a city show.